Adrian is our next presenter. Adrian is a good friend of mine. I've been giving away his Around the Horn books. I love the methodologies and the visual nature of the patterns that he likes to talk about. A great technician, partner and friend of Metastock for, geez, longer than my hair went away. But he's been decades partners with Metastock. Let's go ahead and bring him on here and talk to him a little bit. Adrian, how you doing?
I'm really good. Are we?
That's good. I can hear you.
Webcam here. There we go. So it's a trading day. So we're sitting here, slumming it in sweatshirts and such in the office. But it's good to see you. I appreciate the kind words. And we've been Metastock fans. It's going on 20 years. I'm gonna say it's been at least 20 years. So that's
cool.
Fun.
I just sent the screen share over to you. I can see it. You sound good. No problems yet. Let's make sure we can see your screen, and then I'll get out of your way. Okay, I can see it. Everything looks good on this end. I'm here if you need me, Adrian. The floor is yours.
All right. So I will turn the camera off for a minute just so that it's not distracting, right? And then we'll turn it back on again if we do questions or whatever. This time, I left a lot of room for questions at the end of this thing because it's happened before, right? That I run out of time and then can't answer questions, and I think that's worse than having just a little bit less on the content side. Today, I'm doing something very, very different from what we normally do in these sessions. So normally in these sessions, I talk a lot about the plugins that we've got for Metastock, which are fantastic, right? So if you run my Around the Horn stuff, the patterns, I'll talk about where those come from in a second here. But if you run those in Metastock will pretty much spit out a picture-perfect representation of what each one of those patterns should look like on a daily chart. And then you can go and drill down and trade them either intraday or you can trade swing trades, right? We do mostly day trades. We are active traders. We don't hold anything overnight. But Metastock does a great job in the module, in the Around the Horn module, of going and finding the patterns that I trade. They're all going through and pretty much tracking order flow, tracking money flow through the markets, figuring out where the money's going, where the money's been, following the footprints of money as things move through the markets. And today, what I'm going to do is something more sort of nuts and bolts. This is going to be, how do you take the numbers that are right in front of you and interpret those in terms of what's going on right now in the indices, and then trade those indices using either stocks or options or futures. This is very applicable to what most of you do. I know a lot of you trade options, a lot of you trade futures, guys like the leverage. Julie and I, we pretty much trade the stock, right? So we trade the ETFs, we trade the stocks, we trade opening gaps. You guys have all seen my opening gap seminars that we do. Today, let's focus on trading the indices. So here we go. Okay, so that is the lovely Julie and me. We are at the New York Stock Exchange there. That is sort of where we made our home for a lot of years. We only traded NYSE listed securities. We were down on the floor of the exchange quite a bit. We spent all sorts of time analyzing data when we were working on our PhDs that came from the New York Stock Exchange. So the reason for this was we're both psychologists. We both have PhDs in psychology, and we were very attracted to the fact that on the other side of every single trade that happens on the New York Stock Exchange is a single human being. So that single human being used to be called a specialist. Now it's a designated market maker, and gave a personality to each and every stock that they traded. So when, I think I'm in front of the Barclays booth with Julie, that would be Jason, our friend Jason runs that booth. It would be Michael Kors. It would be Harley Davidson. He traded Disney, right? He traded, so the things that he traded had a very specific way of trading that we were able to identify, and that then you could go through and you could sort of replicate the psychology yourself of, all right, well, here's what's going to happen if it gets to level A, here's what's going to happen if it gets to level B, if it goes up, if it goes down, right? He's going to keep it sort of bracketed up in whatever region he's got it in, and that's where we cut our teeth. I mean, this is how, we figured out what trading was going to mean for us. Over the years, this focus on decided it's time to go and trade NASDAQ, trade ETFs. That was mostly a function of automation. So NYSE became a place that was no longer so driven by the specialist system. It became a place where, ARCA, the archipelago, the order routes began doing automated trades. Things that were less than 1,000 shares were going through ARCA were automatically routed to the most efficient order route. So it wasn't so much anymore reliant on that one guy. So we opened it up. We started trading the NASDAQ. We started trading, as I said, ETFs. We started making the move into sort of a broader trading business. And over the years, this thing has developed into something of a phenomenon, because we still do what we did at the very beginning. So we are still trading those patterns that we traded at the very start. Things that are around the horn are still the patterns that we trade. We still focus on the psychology of what each trader is doing. And it took off and get a lot of people interested. And now we've even got a TV show about it called Trader Nation, which is going to be airing, I think, in this spring or this summer, and will be on a Scripps network, probably in wherever you are. And what we do here is we go back to our basics, and we're going back to those. We do a deep dive with trader psychology. We're going to focus on, like, I think the first episode was all about the gamblers. So we've got traders who, I heard Jeff talking about, the habits that people get into and the things that get people sort of in front of opportunity in different ways, right? So the gamblers are guys who, in this case, one of them is a guy who likes the action and suffers because of it. And another one is a guy who likes the risk, but likes to control what's in front of him and does very well because of it. So how do those people work with their psychology? How do they get around, the things that might hold them back? How do they turn things into opportunities? How do they overcome the problems that are sort of inherent to the way that they think? And it's going to be an interesting show. If you'd like to submit a question for the show, you can just send me an email with a video of yourself on a phone, right? Do an iPhone video. It's for the America Ask segment, and it's just Adrian@traderinsight.com, and just ask the question, and we'll try to get it answered on the show on TV when we do this thing live. So it's all fun. It's all good stuff. I'm just telling you about this because it's exciting for us. It's changing up the way that we do things, or changing up some of what we do. And, it's when you've been staring at these screens for the last 20, 25 years, it was a welcome change for us. So we spend a lot of time, Julie and I, sort of in and around the market. That's our son Connor. He's, he lives and breathes the market. He's in the middle there, sitting on the bull, obviously. We spend a lot of time still involved with the New York Stock Exchange, still involved with the things that were our roots. And, over the years, what we've come around to is, people want to overcomplicate this trading thing. They want to come up with a way to trade that handicaps everything out of the trading day and makes it possible to not really think about what's going on. You're trying to take the emotion out of it. You're trying to create an algorithm most of the time that will tell you what to do. And then the reality is that most people who apply this kind of method wind up not doing the thing that they're told. So that gets into your psychology, that gets into your sort of self-image as a trader. It gets into this entire notion of, who are you, and, what exactly are you doing here? So we've written a ton of stuff about this. So we've written a lot of articles for magazines, for journals, talking about not just the technical side of trading, but also the psychology of it. What is it that is going to make it very difficult for you to trade? What is it that's going to make it very easy for you to trade? What are the things that are going to create the interplay that's either going to give you a successful career as a trader or hold you back? And, most of what we found out is, as Jeff pointed out earlier, you will wind up being your own worst enemy quite a bit. The biggest roadblock to your success is between your ears. And I've got people who I trade with every day. We have a trading room, and our clients are in there, so we do these boot camp things, and those guys wind up trading with us for years. And we'll see them every day. And every day what they do is fall into the same patterns of just psychological stumbles of their system tells them to do one thing, they don't do it, then later they regret it, so they jump on the next opportunity even though it wasn't as good, and then they wind up losing money, and then you see, I told you I wasn't good at this, and this goes on and on and on, right, over time, where they'll continually second guess themselves and then always wind up in the position of losing even though their instincts were correct to begin with. And so a lot of this stuff that I wrote in these magazines talks about the different patterns and things that I look for, but it also talks about the psychology that's necessary to get yourself in front of opportunity and then to act on the opportunity and do it consistently across time. And that's the strategy that we're going to talk about today as well. These are the books. I wrote Around the Horn was the first one, and is still the cornerstone of everything that we do. Metastock has given away a lot of those books over the years with the module that searches for the patterns. The patterns are fantastic. The most important thing in that book, of course, is that you understand why the analogy to baseball is there to begin with. There's a bunch of things, right? It's the psychology of Around the Horn is really about moving around the horn with the market, going through the cyclical nature of markets and when are stocks being accumulated, when are they being distributed, when do you have consolidations going on, and how do you react to each one of these phases, and then at the same time, do you have the psychology necessary to step up to the plate each time and have a fresh look at the market, to not remember the time you struck out, to have a fresh perspective on the next swing that you're going to take. Are you focused on the time that you knock the cover off the ball and hit a home run, or are you focused on hitting singles, and really the important thing is that my psychology is going to square up with what's actually going on in the market. So that is that book of pretty much everything that we do. It was, I wrote that, the first edition of that was, I think, in 1999 or 2000, and it was the groundwork for everything that we've done since. So really nothing has changed. Julie and I are still stock traders. So as I said, I know a lot of you trade options, a lot of you trade futures. We do what we have done since the beginning. We don't hop around. We don't, there's never been a period where we traded Forex. There's never really been a period where we traded options. I've got lots of clients who trade options. We sort of tweak things to help them figure out how to apply this stuff to options, how to negotiate the spreads that have to happen in options trading, how to negotiate the slippage that happens when you're trading options. But Julie and I, we focus on those core stock trades. So as we go through today, and I talk about this pretty straightforward, simple kind of a strategy that I'm going to show you, remember that it all emanates from something that we developed in graduate school in the 1990s and have used ever since. And I think that's really, if we've got something we can point to as our biggest strength, it's we've been doing the same thing for 25 years now, and it still works for us, and we're still doing it. And you're not going to hear us talking about some newfangled system or some new scan or something that we just developed that's going to make you 1,000% return tomorrow. It's always about this basic methodology that led to all the rest of this stuff. So World Cup trading, that is obviously the Italian version of around the horn. So we took that baseball metaphor, the baseball analogy, turned it into soccer, and the rest of these things beat the street. And Trade Secrets over on the right there, those are the international versions published by Harriman House of the core books. So the core books are still around the horn, Trade Secrets, and Tricks of the Trade. So what do we do with all this stuff? We broke it down into a learning system. So a lot of people came to us over the years and said they'd like to learn how to do what we do. They want to learn how to trade. We are, of course, as PhDs, we always look to be educators. We thought that someday we would be teaching at a university. Instead, we are teaching at our own sort of university. We go out and we train people twice a year. We don't do a bunch of this stuff because our core business is still trading. But we do this income trading academy that is then paired with our live boot camp. And that then gives the guys all the fundamentals in what we do. We do it with 20 people. We do it twice a year. We get about 600 people who apply for this thing. We try to make sure that the psychology of the applicant is going to be suitable for sort of what we do and how we do it. And then we narrow that down to 20 people who are going to come and work with us. We usually do it in Miami Beach because it's not very easy to do things here in Los Angeles because of the time zone and everything. And then they work their way through. So you can see there's a trader work environment scale and a trader type inventory that are available on our site. If you guys are interested in taking those, they're free. You just go to traderinsight.com and send us an email. Send Julie or me an email. It's either julie@traderinsight.com or adrian@traderinsight.com. Let us know you want to take those inventories. Those will give you some insight into how you work and how you do things. And also give you a feel for what's actually suitable for you. And then if you find out that you want to work with us, you can sort of start the process of, do I want to go to boot camp? Do I want to work through these other courses that these guys do? These are all things that we do to make a living. And if you're a good psychological match for the way that we do things, then they might be a good fit for the way that you can make a living going forward. If you look around those tables there, if you look around that room, these are all people who have committed at this point to, what we think is a year-long adult learning process, winds up being more like a 10-year program because they never go away, because we all wind up being very close friends. And the thing to focus on as you look around the table is, next to me there in the bottom photo, there's a guy who ran a chemical manufacturing company. There's a guy who was a cop. There's a guy who is a cop. Trades from his patrol car in Michigan. There's a guy who's a farmer. There's a guy who's an attorney. There's a guy who's owns a plumbing supply company, and you can go right around that table, and what you find out pretty quick is everybody is, from a different walk of life, but everybody is very much the same in that they want to conquer this thing trading. What they have to overcome in almost every case is their own psychological demons. So you've got your relationship with money. You've got your family. You've got all sorts of pressures on you each and every day that say, am I smart? Yeah, I'm smart. All those guys in that room, very, very smart guys. Am I competing with myself in terms of my psychology? And what is it that I'm going to do to temper that psychology then and make it possible for myself to make a living trading? And that is part of what we do, when we're working with these guys one-on-one, or when we're working with them in that room there, right? We're going around, you can see everybody's got their computers, everybody's trading live, they're all successful to some extent in their trading business. They all want to be more successful in their trading business, more consistent, right? Consistency is always the big thing that comes up, and the way that you get consistent is you know yourself, then you know the material, then you get actively involved in the business of trading, then you look for the feedback that you get from these people who are around you, and you practice, right? So I put these guys in front of a ton of simulation. We go through and we say, you've got to go and simulate the trades, go through with Metastock, do the scans, go through, find the patterns, and then day by day trade them out in a simulator and find out, what's it take to really make a living doing the strategies that Julie and Adrian have developed. So with that, let's talk about the strategies, and we're going to talk, like I said, one strategy in particular and what it takes to get in front of an opportunity and then capitalize on it. So ask yourself, look through this list of things here, and ask yourself, how many times have I failed to pull the trigger on a good setup? So how many times do you sit in front of the screen and you see the opportunity, it's coming right to you, and then you don't do anything with it? And then it comes back a second time, and maybe you don't act on it again. And then when it comes back the third time, you go and you act on it, and then you wind up losing money on a position that made you money the first two times that you didn't take it, and you start questioning your ability as a trader. How many times have you been in a position and it was going against you and you moved the stop, or you didn't have a stop to begin with? How many times did you say, you know what, this is, maybe the stop that I have set here is too tight, so I'm going to give this thing room to breathe. And then when you give it room to breathe, you're like, well, I'm already down this much, so here's what I'm going to do. I see this other level. Let's treat this like it's a new trade, and let's move the stop to this new level, and let's see if, maybe we can recapture some of what's gone wrong here and sort of get things going in our favor. That's a function of we don't like to lose, right? So we don't like to take the loss, because when we're in the loss, it feels bad, or when we finally take the loss, it feels awful. And taking a gain feels good. That's a win. Americans in particular are super focused on winning is good, losing is bad, right? Winning, I'm winning. Well, what happens then is every time you have a small win, I've got a guy who trades a strategy we're going to talk about today, and I'll tell him, our target here is $1 or $1.50, and he's trading it in the options market usually, and I'm trading it in the stock, and I'll say, all right, I'm out at the target, and he says, oh, I got out with 20 cents, or I got out with 30 cents. So why does he do that? It's because getting the win, booking the win feels good. Booking a loss feels bad. And, you go right down this list, and, you can see these are the habits of traders across the board who we run into. They'll add to losing positions. They're going to dollar cost average, right? which is never a good idea, especially when you're trading actively, when you're trading intraday. They have big profits in the morning. So John, who you'll see on the pilot of our show, he's a gambler, and he makes big profits in the morning because we've got a lot of strategies that focus on the open, that focus on booking some big wins first thing in the morning. And then he gets pretty loose and decides he's going to spend the rest of the day trading because he had a good morning. And by the time the afternoon rolls around, he's got himself in a deep hole. He'll take a $5,000 gain in the morning and turn it into a $5,000 loss, which is a $10,000 turnaround, right? And then spend the rest of the day trying to get out of the hole. So by the end of the day, his big success is he's back at zero, or he's back where he made a few $100s, where the reality is if he would have just stopped trading after the morning, he would have been profitable for the day. Taking unplanned trades, holding them for home runs, right? These are obvious problems that we've all seen ourselves get into. And then also reducing position size after a loss. So you had some losses, and now you tell yourself, well, you know what, I'm going to cut my share size down to 100, and or 50, or 1, or whatever you're cutting back to. And then once I get consistent, I'll up the share size. That's an inability to focus on your relationship with money. And what it does is it says, you're going to cut this back until it feels like it has no impact on your life, or it has no impact on your finances. And then once I get good at it, I'll up the share size again. And what really winds up happening is you get good at it pretty quick because it really doesn't mean anything to you. And then as soon as you raise your position size back up again, you wind up in the same place of, holy smokes, wait a minute, I'm down $500 here. I don't have a P&L on any stock that I'm trading ever. So I don't have a thing up that shows me how much I made, how much I'm losing. All I know is I've got a plan. I've got an order out there. I'm going to let the order take care of itself. And at the end of the day, I'm going to find out, did everything go according to the plan? Did my trades go off the way that they were supposed to? And the way that I measure my success is, did I do what I was supposed to do, yes or no? And it's not about, did I make money? So these are all things that you can think about. I mean, ultimately, you have to make money, right? It's a business. But the path to that particular freedom is you have to stop focusing on the end result and focus more on the process. So we've got lots of stuff. I'm not selling you anything here today. I just want to tell you that, we've got different strategies for different times of the day. A big part of our business is focusing on workflow. We've got a NASDAQ strategy that's all about trading volatility. So I've got a strategy here that goes and says, I've got, usually it's Apple, it's Microsoft, it's Netflix, it's Tesla, or it could be NVIDIA. But there's 4 stocks on this scalping setup that I do. And they're not really scalps. I mean, they're more volatility band setups. And what they do is they focus on how can we get in front of the order flow from yesterday, the thresholds that gave us big moves in the prior session. And when those thresholds are hit today, how can we get in front of that order flow so that if it reasserts itself, we can go for that same ride? So the scalps there are really, you're looking for anywhere from 60 cents to $2 in terms of the range that you're looking to track. Then I've got an opening gap strategy. And the opening gap strategy goes through and it handicaps. It says it's that second thing there with the red and the green zones on it. It says if you're in the S&P 500 or you're in the S&P 400, then did you gap by 2 standard deviations of the volatility that we expect to see in whatever the stock is for the day. And if you gap 2 standard deviations, then are we looking for a reversion to the mean? So are we looking for a fade either to the long side or to the short side based on what just happened in the pre-market, in the overnight session? All of them are focused on gaps that are either in the news or are driven by earnings. So we focus almost entirely on run-of-the-mill news, run-of-the-mill earnings stuff, and did that gap push the stock further than you would expect it to be pushed statistically? And if it did, then we look to fade it. I've got this fastball XRV strategy. That is another order flow strategy that we use. Goes through, finds out based on what happened yesterday, is the order flow likely to reassert itself? Was there something happening that an institution was doing that didn't get finished over the course of the session? And if it winds up being the case that it pops up on our nightly radar there, on our nightly scan, then we put it on for the next day. I've got 1 or 2 of those almost every single day. Those are pretty much $1 moves. We're looking for a move to a pivot line, and it's completely automated. So I'm just putting that in ahead of the market. I'm saying get me in at a threshold, get me out at $1, get me out for $1 loss over the course of a year. That thing puts up about $10 per month per share traded. I know exactly how it performs. I don't need to interact with it during the day. I can take myself out of the equation. And it's the same thing with the around the horn trading plan, So the around the horn trading plan, those are the things you can scan for with Metastock. You set those up ahead of time. You set those up with conditional orders, with bracket orders. They go, they execute, and they replicate all of these patterns that I've got in the book here. And what they do is they just go through a fastball as an expansion of range, expansion of volume, looks for institutional order flow. Infield fly, that's an exhaustion after a big move to the upside. These things represent the market cycle. I'm not trying to fight the market, right? Almost every cycle starts with a fastball move. Almost every cycle is going to have an infield fly set up. The line drive is a gap and go. The 3-2 pitch is a reversion back down into that expansion of range and volume move that I call fastball, right? So it's like a fib pullback, but it's not necessarily a fib. It's just driven by order flow. Backdoor slider is an inside day on the heels of a fastball before a cycle continues to move. Switch hitter is a Fibonacci retracement. Right, and double header is like a kings and queens kind of a setup, something that reverses back into the trend, takes you back down towards the dominant trend, gives you the opportunity either to go long, to go short. But all of these things, when you look at them, represent your cooperation with the market instead of you trying to beat the market. We're never trying to beat what's going on. Every single thing that I do, everything that I look for in these Metastock scans is focused on how can we figure out what the market is currently doing, what the most likely reaction of the market is going to be over the coming days, and then how do we capitalize on those opportunities. So if you don't have it already, I assume most of the people here, your Metastock users, you probably already have the scans, but if you have them, use them, right? Because they're incredible tools. I use them every day, right? And I literally wrote the book. So it's a great tool to have in your belt and to put to work for you each day. So our big thing is we plan everything. So what you're looking at here is, my personal, these are gouge sheets that we have for our trading plans. You can see there on that particular day, right? It doesn't really matter what day it is. It's what's the symbol, what's the setup. So just by looking at this, I know without having to look at a chart or anything, I've got, Dick's Sporting Goods, TKS down there on the stocks to watch. It's a switch hitter. That means it's a fib retracement. I'm looking at an 89.90 entry. I'm going short the stock. I've got a maximum stop up around $90.80, $90.78, 50% of the distance to my profit target, $89.24, and the actual target, $88.58. That tells me everything I need to do to set the trade up in the morning and let it go. So I don't have to interact with this stuff. I don't have to second guess anything. Abercrombie and Fitch, you see there, it's on that day it was a switch hitter setup again. That's a fib pullback. I've got my entry. I've got my direction. I've got the stop. I've got the target. I've got 50% of the distance to the profit objective. That's where the stop gets moved to break even. Everything in my trading software can be automated so that I don't have to fool with this stuff over the course of the day. This is where I do the analysis. So as I said, I'm not looking at these and saying, gee, how's it going right this minute? Because what that does is introduces this problematic psychology of you're evaluating and reevaluating everything that you're doing all the time. What Julie and I have found over the years is, you are really not going to be the best manager of your psychology if you're trying to influence yourself over the course of every trading session. What we do instead is we look at this particular spreadsheet daily, weekly, monthly, right, quarterly, and we get a good analysis of what's going on. So I see, how many times did I identify a pattern? How many times did that pattern trigger? What was the profitability of that pattern? What's the overall profitability? How many times am I long? How many times am I short? And, what I try to do is put this stuff up against the metric of, okay, and what was actually going on in the market? Did I introduce some sort of selection bias when I was setting up these trades? Did I favor, say, the fastball trade when it didn't trigger that often, but I was out there looking for it? So I can look at those pies up there and just say, you know what? Pretty much the number of times that I identified it were the number of times that it triggered. All right, was it? So if I got myself into that trade very frequently, did that trade wind up being very profitable over time? And then I look at my pattern profitability and I say, yeah, it did, right? So I didn't have a bias in selecting the trade. The trade selected itself based on what was going on in the market. And over time, over the course of a year, right, there's a day trading account allocated out at 4-to-1 leverage, right? How much did a $100,000 account return? And I can see, okay, well, the return on equity, it's a job, right? This is not investing. This is a job. You have to go out there and earn. And the more money you're trading with, the more money you should be making in that account if you're doing things right. So this gives me the metric to go through and evaluate, all right, what happened last year? There's last year. What's happening this year? Right? Where are the patterns? Where's the profitability? What are the things that are making money? What are the things that are not making money? How much is represented by the things that are losing? You see there's two patterns this year that haven't come through in terms of profitability. That was infield fly and double header. Then you go up and you look at how many times that those patterns present. Oh, not very frequently, right? So I'm not worried about their performance because they represent this tiny little piece of the pie. Then I can go over and look and see, infield fly has only been 5 times for the year and double header was only once. So right now the data is insignificant. So I'm not giving myself this emotional beatdown that people do of, oh, you know what, every time I get in front of that position, I wind up losing money, so I'm just not going to do it anymore. Right? What I'm doing instead is giving myself a very objective, analytical framework to say, I'm not going to damage my own psychology. What I'm going to do here is look at what actually happened and give myself a fair evaluation of my skills as a trader or my skills as an analyst. So I think that's really in a nutshell, in a big nutshell, right, is what you need to do in order to foster your own success going forward. So we tend to trade pretty heavily around the open. That's where we've got our discretionary trading. And even when you've got a lot of discretion in what you're doing, you need to be aware of your strategy, your discipline, your psychology. You need to have all these things in place. You need to have everything lined up so that you can go and give yourself an objective framework to work in right around that opening bell. So if you're a day trader and you want to get out there and show the world what you can do, then what you need to be aware of first and foremost is what's the strategy, say, I have to do in order to succeed? What's the discipline that I need to put in place in order to succeed? And what's the psychology that I need to use to avoid beating myself up, to avoid putting myself in this bizarre position of constantly second guessing, how do So this is my workflow. It's not necessarily what it's going to be for you or for anybody else, but when we go, we do these, like I said, we do these boot camps, and I talk to these guys about workflow. And then we go and we do a bunch of, ski trips. As a matter of fact, we're going this weekend. We're going to Mammoth. If any of you are going to be there, shoot me an email if you happen to be going skiing. I love talking trading on a chairlift. And a lot of what we talk about is, how do you organize your day so that you know what it is you're going to be doing, and you don't feel like there's some sort of random walk going on as you're trying to organize your trading? Well, in the pre-market, what I do is I program up those fastball XRV trades. I program the trades from the Metastock scans, right? The around the horn trades, the New York Stock Exchange trades. Those are all NYSE, right, that I scan for. And I pre-program those, and those are set up to go and, set it and forget it, just let it take care of itself. Then at the opening bell, I execute the NASDAQ opening trades, the Apple trade, right? So we look for certain levels that occur on the exchange, on Apple in particular. So we try to get a pre-market feel for where the inflections are going to be. We go and we time those. We set up the trades. We get those going right at the opening bell. Once the 5-minute mark hits, we focus on those 2 standard deviation opening gaps. So we do that from 6:35 in the morning Pacific time until 7 in the morning. And the reason for that is that scanner finds a distribution that has moved 2 standard deviations away from its average, and over the course of the first 30 minutes, we've got a 95% expectancy that this thing is going to revert to the mean. After the half hour is over with, we've got a very high probability that if it hasn't reverted, the distribution has shifted, and if the distribution shifted, it's no longer a valid setup, right? So we've got like the time slots filled where we know exactly what's going to go on. After the market closes, I go through, I do my analysis, I figure out what we're going to do the next day. But it's a very straightforward setup where what we're doing is figuring out what's the workflow going to look like, and then we're just going to go and capitalize on, right, automated opening trades, 2SD gap trades, and then the super cap volatility band trades. And that's the one that I'm going to talk about here in a second, is how do you go through and identify where that order flow is going to be and capitalize it over the course of the day. So again, strategy, discipline, psychology, those things have to interact in a way that is going to make it possible for you to get in front of the opportunities and actually then cash in on them. So the first thing you're going to do, plan the trade. I'm going to show you my scalping strategy for the triple Qs here in a second, and what you're going to see is I set it up and I let it come to me. I'm very much about, I'm a trapper. I'm not a hunter, right? There's a good article about me in it was SFO, Stocks, Futures, and Options magazine, and they said hunters versus trappers. Well, Adrian is a trapper. He has the price has to come to him, and what he wants to do is set the thing up to snare it, and then other people focus on, they want to hunt, they want to chase momentum, they want to, that's not us at all. We are very, very focused on let the price action come to us. We have logical stops based on support and resistance So you've got a target that's based on support and resistance. You have a stop that's based on support and resistance. And if it hits those inflection points, you're out. You're not trying to hang on to it. You're not trying to move the stop to give it more room to breathe. You've got everything in place in a very, very objective manner. Makes it very easy for you then to go through and actually do what it was you said you were going to do. And this should always be your evaluation of your success or failure as a trader. I'm not going to say failure, your success or your need to foster some more success as a trader, right? So when we trade our plan, everything is done automatically. Everything is done with the benefit of trade automation, and we get in where we're going to get in, we get out where we're going to get out. And as my son used to say, he's 15 now, so he didn't say it anymore, but he used to come into the boot camps and he would just say, guys, they're going to go where they go. So with that said, let's talk about your relationship with money, right? So I think personally, you should have your P&L off the screen when you're trading. I don't think that it's ever useful to have a running indicator of whether or not your current position is profitable. You need to follow through. You need to, so if you take those assessments that we have at Trader Insight, if you take the psychological assessments, what you're going to find out is, based on the test, based on my answers to some questions, how good am I at the follow through? What's your relationship with risk? So when we look at these charts in a second here, think about, how comfortable would I be trading with that amount of risk on a position? What if it starts going against me? How am I going to feel about what's happening in the trade? And then how do I deal with boredom? This could be a lot of time sitting in front of the screen doing nothing at all. So this particular strategy that I want you to think about in terms of, how do you relate to it as a trader, goes and tries to identify institutional order flow. So what I'm looking at today here is the triple Q. Triple Q is going to be a good proxy for just about everything, right? Just about everything technology oriented. And it's an easier place to identify order flow. It's an easy place to identify the trend. So you're not trying to drill down into a particular stock or a particular sector. You're looking at the comp. You're looking at the NASDAQ 100. You're trying to figure out, right, what's the trend in the overall market. Then you got to look for confluence. And I'm only showing you two things that I look to for confluence today. There's more, right? So we're doing an event in Vegas where in front of the Traders Expo on April 23rd, we're doing an event that we call Super Vol Sunday, right? So Super Volatility Sunday, where I'm going through and showing guys exactly how to find all the different confluences that tell me that a trade is going to be a good one. How do I plan the entries and exits, right? And how do we then get in front of these opportunities, and how do we wind up profiting over time from the strategy and this discipline? So what you're going to do in the case of this simple setup is you want to identify the opportunity. You want to go through and confirm the opportunity. Confirm it, I mean look for confluence, look for things that are lining up. We want to set up conditional orders to put up bracketed trades and then not fool with them. So we want to be able to put trades together and put them together in a way that allows us to just automatically execute and have them go off with our allowed slippage. So what I do is a stop limit order where the stop is the desired entry price, the limit is the maximum amount of slippage that we're looking for, and then the brackets are the profit objective and the stop loss. And once those things are in, we don't touch the trade. So as long as everything is lined up, the discipline says we want confluence. We want to make sure that we're only entering when we're moving in the desired direction. So in the case of the triple Qs, right, I want to know is the instrument net positive or net negative on the day? Is the trend established? Are things moving in that trending direction? And then what I'm doing is I'm waiting for pullbacks to the levels that I want to trade. So I start this. If you look here, you guys should be familiar with this. If you're not, shame on you. You should be pulling up your Metastock charts and looking at dailies every night to see where are the likely travel ranges going to be. So here I'm looking at a daily chart of the Triple Q. This is from, this was the setups for yesterday's trading. And you can see that I go back and I just do a very basic analysis in this case of the order flow. And I'm trying to figure out when price got to a certain level, where did it inflect, right? Just basic support and resistance stuff. And you can see that prior to yesterday's session, we were able to predict with real stunning accuracy where the big inflection was going to be. And this is based solely on what did the price do when it got there before. And I get guys who come to the boot camps and they're like, well, you know, do I need a crystal ball to be able to do what you're doing? Because it seems like, you know, sometimes I feel like they think I should be sitting in a Zoltar booth somewhere, you know, dealing the cards because I've got some ability they don't have. The reality is they have it, they just don't see it, right? They don't want to look at this thing and say it really is that simple. When you get to a point that was an inflection in the past, excuse me, the most likely thing that you're going to have there is an inflection again. So look back to the left. When price hit that level, that bottom line, what happened before, and then go to the right and say, you know, what happened on the day that we're planning our trade? Well, it did it again. So obviously, you know, today we've got a day where, you know, we're moving lower again and getting down into the range. I can tell you, you know, where I think the market's going forward, but that doesn't really matter. What matters is what's happening right now. So find that support and resistance on the daily chart, then you drill down into the intraday. And you can see here, right, that, you know, one of the things that I look for during the day is volume by price, so sort of the levels that things are happening at. That's while I'm trading live, while I'm actively doing this stuff. But what you see here is just the basics, right? I can guarantee you the volume by price is going to line up with those levels as well. As you go down and you ratchet into each one of these levels, you can see the previous day we had support. Today we have resistance. The previous day we had resistance. Today we have support. And as you go through here, you can identify the levels where you might want to take a trade if price gets there again. So a lot of the morning we spend doing nothing. So as price is moving down, we're waiting for that trend to establish itself, because at the open, you're thinking this market's going up, right? On the triple Qs, what I do is I let it settle in. I let it settle in until about 8:30 Pacific time, so about 11:30 Eastern time, and then I say, where's it been? Where are the footprints? What's the market doing today? And then what I see are these very clearly derived levels of this is where the order flow was. This is where, if price gets there again, if I'm headed down, if price comes up, then what I expect to see happen is I'm going to get an inflection. It's going to drive price lower. If it drives up again, I'm going to get an inflection. It's going to drive it lower. And if you look at the area on the chart that's about 12:15, 12:30 in there somewhere, you see that's where we had the bulk of the trading that we did in the triple Qs over the course of the session. And it's, you know, 1, 2, 3 trades, all for a profit, all for about 60 cents a piece. That's $1.80. You know, do the math on 1,000 shares, $1.80 gives you a really good return for just sitting on your hands. You're using your hands as a seat cushion for most of the morning when you're doing these volatility band trades. But when it gets into the range that defines your expectancy, what are you doing? You're getting in front of the opportunity. So I'll go through. I identify the support and resistance levels. One of the other things that I use when I do this are fib retracements. So I'll go through and, you know, there's a bunch of stuff. So if you're coming to Vegas, if you're already booked for the, I think we're almost booked up for that thing, then, you know, you already know there's layers that I put on top of this thing that handicap it and tell me, right, that right at that level that I just said we're looking to go short from, we've got a fib retracement. So that's an additional level of confidence. I know that a lot of people follow fib zones. A lot of people follow the inflections. A lot of people follow the retracements, the projections, all that stuff. So I know there's a self-fulfilling prophecy that revolves around where those lines are going to wind up on a chart. I know that if those lines happen to overlap with the support and resistance that I've drawn, that tells me that I'm in front of an opportunity that makes sense. If I go through and I plot, say you're using Zenith or I think Metastock also has the ability to do it natively, the VWAPs, right? If you're plotting the anchored VWAPs and you're saying, well, where's the volume weighted average price of a leg of a trend? Where's the volume weighted average price of the entire trend? And that winds up overlapping with that same data. You've got that much more confluence. You've got that much more confidence then in the fact that what you think you're seeing is actually what you are seeing and something that you can act on. So as I said, this is not exciting stuff. This is not, it's not going to get your gamblers excited. It's not going to get the guys who are looking for action, the guys who are looking for momentum. They're not going to be super excited about trading these things. But what it does do is put you in front of, 1, 2, 3 opportunities. Usually I tell people third time back to the well is the last time for these things, because go back to the well too many times, you don't know what somebody's done in the well. This is the way that we define the opportunities over the course of the session. And this is the way that we wind up with more winning trades than trades that wind up going against us. So hopefully what you see there is, it's pretty straightforward. If you want to join us in Las Vegas, it's April 23rd. It's live or live stream. We're going to do a live stream version of the event so that everybody can do it from home if they don't feel like going to Vegas. We're also going to be at the Traders Expo in the following days, the 24th through the 26th. We're doing a bunch of sessions they've hired us to do for them. We're doing a mastery class at the Traders Expo. I'm going to be talking about the Metastock add-on at the expo, and I'm going to be showing you how to use, if you already have that add-on and you're using it in your trading, then I applaud you. If you have it and you're not using it, then you need to give me a call or you need to send me an email and just say, hey, I would love to put the add-on to work. What is it that you do with this thing, or how is it that you use this thing? Because it's super powerful. And, Jeff developed that with us almost 20 years ago. And like I said, we still use it today. And the guys who are using it, they really love the mechanics of it. And they love the way that it finds the patterns. All right, so I'm running out of time. I'm going to say that if you want to ask me any questions, I look about like I feel today. But if you want to ask some questions, I've got time here for a couple questions. And then if not, you can also email me, Adrian, Adrian, at traderinsights.com. Or you can send me a text message at 310-804-2248. That's usually the best way to reach me. And I'm always happy to get on the phone and talk to somebody about trade. I love trading. It's our passion. It's our life's work. We've been at this a long time, obviously. And as I said, I think the feather in our cap is we're still doing it the way we were doing it. Things here don't change every day. Things here are all about the consistency and the reliability of what we've done. All right, so hopefully, Jeff, I didn't go over, I don't think. But if anybody has questions, I'd be happy to answer. And like I said, you can always email me if I ran out of time.
Questions? We've got some questions and a couple comments that I thought that were pretty interesting. Vivek says, "Wow, so many books." So there's a comment a little bit earlier about how many books you've released. Brian wants to know, with respect to order flow, do you analyze quotes for selling to bids and buying from the offers?
So with respect to, when we do the order flow analysis, I mean, a lot of, you can see our trading rig behind us here. We're evaluating. We are evaluating the tape. We do scrub the tape to try to figure out, is there an order flow imbalance? Is there more happening on the bid, more happening on the ask? That is much more frequently the case when we're looking at individual stocks than when we're looking at something like the triple Q or the spiders, diamonds, Qs. All that stuff is so liquid that really whether it goes off bid side or ask side isn't going to matter. The bid ask spread is a penny. But when you're looking at individual securities. If we're looking at, at Kellogg, or if we're looking at Lowe's, or, we've got a couple things up here today, or national retail properties we had up, we've got Hyatt up, those things are trading thinner, 200,000, 300,000 shares so far today. There you can go and you can pick the tape apart a little bit and say, how much is happening on the bid side of this thing? What's the spread, right? When it's 2 cents, 3 cents, it's not going to really make a difference in terms of the order flow. You can't do the analysis the way that you did, 20 years ago, because you're not talking eighths and quarters, you're talking pennies. But right around the opening bell, when we see the opening gaps, we do quite a bit of analysis then on what's the bid-ask spread and what's going off on the bid versus what's going off on the ask.
Nicole wants to know, is this Adrian Mance?
This is Adrian Mance.
This is the real Adrian Mance, yes. Let's see. Reneshik says, can you repeat your number?
Yeah. So if you want to send me a text, it's 310-804-2248. Always send me a text first, because I get a lot of spam calls, so I like to make sure I'm actually going to be talking to a human and not a not a real estate salesperson or something. Somebody wants me to sell my house. But send me a text, 310-804-2248, and I'll be happy to get back to you and talk to you about trading.
All right. One more, because we're out of time, but Lon wants to know. Lon actually said, I created an excellent trading system, but procrastinate when it comes to pulling the trigger on YouTube. Do you have any advice for it?
Automate. So automate what you're doing. So when you have a trading system that works for you and you're unable to go and do the executions yourself, the best thing that I've ever found in terms of getting our guys, like I said, we train about 40 people a year, getting them to go and act on the opportunity is really all about set it up before it gets to the price, so that you're not making the decision when it gets there, because you're always going to second guess it. You're always going, I've sort of seen it. Well, what's the market doing here? I've seen this kind of thing before, and I went again. Oh God, look at this now. It's going in my favor, and it's I'm not in it. So the best one to talk to about that is actually Julie. Julie focuses very heavily on the trader psychology stuff. So we're both psychologists. I love the psychological component. Julie lives and breathes it. So she talks to our, Eric, if you're here, I'm going to pick on you, our sort of problem clients who let their psychology get in front of them and block them from succeeding. And she'll talk to them and just really, really push, automate. If you know what you're supposed to do, then, and you know that your problem is actually going and doing it when you're sitting in front of the opportunity, it's not that you're procrastinating, it's that you have the feeling that this time is the time it might not work. And that's always going to get inside your head. And once it's in your head, the people ask us about our war room, and, how do you set it? I tell them all the time, the war room, right here between your ears. That's the war. You know what you're supposed to do. If you've been doing this for a while, go tell your software to do it for you.
Let's see. Then Lon said, love it, will do. To me, this is the most important webinar of the whole conference. So I'm glad you enjoyed it, Lon. Thank you for the compliment. I'm glad Adrian appreciates the fact that you enjoyed it too.
I do. I'm a ham. Right. I enjoy presenting. I wish we were live, all of us together somewhere. I prefer to be in a room with a couple hundred people, and I always go over my allotted time. Everybody's always pissed at me, but I just love talking to you guys about trading. Again, send me a text, send me an email if you have any questions, and I'm happy to answer.
All right. Let's see. Thank you very much, Adrian. Appreciate it. I got the chat in I got the website. I got the address in the chat, and I want to say thank you for coming in and spending some time with us.
Excellent. So happy to see you again. So hopefully I'll see you in person sometime soon, Jeff. We're going to be in Utah. We're going to ski. We're going to Park City. So
we know a really good Thai place if you like Thai food, or Mexican, or actually we know where all the good places are. Stop by the office when you're in town.
That would be wonderful. That'd be great.
All right, very cool. See you soon. Thank you very much.
Thank you. Thanks, guys. Thanks for coming.